Pemirsa, Anda menyaksikan segmen khusus CNBC Indonesia, Money Talks bersama saya Safrina Nasution. Kita masih berada dalam rangkaian acara Asian Insight Conference 2025 dengan tema Growth in a Changing World. Di kesempatan kali ini, saya memiliki kesempatan untuk berdiskusi secara eksklusif bersama dengan Managing Director and Country Head Indonesia for Global Financial Market DBS, Puneet Punj. Puneet, how are you?
Hi, Safrina. Thank you. I'm very good. Thank you for having me.
Thank you so much for joining us in CNBC Indonesia, and always a pleasure to have you in CNBC.
Absolutely.
Thank you, Puneet. So, I think we met last year.
Yes.
But during this past month, there's a lot of dynamics in the geopolitical and macroeconomics of the world, especially since the administration of Trump. So how do you see the impact on the trade war to financial assets such as equities, bond yields, and currencies?
Thank you, Safrina. So, you see, actually, since Trump came into White House, he announced his trade war, and subsequently, the Liberation Day happened, and we saw all the financial assets going into a high volatility zone. We saw that the first calamity was the dollar index, which actually in the last 3 or 4 months, we've seen it from almost 100 and 109, 110 kind of levels, dropped almost to about 98. So almost about 8 to 9% drop there. The US Treasuries, which have seen a major sell-off, which were actually in September last year, the 10-year was at a yield of about 3.55%, has spiked to almost about 4.5% now, is again a clear indication that that basically some of these correlations are no longer there. We are seeing some multi-year correlations which were there between US Treasuries and the dollar index have actually broken. The US Treasury has also seen that the sheen it had of the safe haven asset has also gone away a bit. We clearly post the Liberation Day. The other thing that we are noticing is in risk assets like equities and credit, there has been a massive sell-off. And post Liberation Day, you saw that the S&P actually plunged below 5,000 levels. We also saw credit spreads widening. If you look at the Indonesia CDS, the 5-year CDS, it used to hover at around 80 basis points before the Liberation Day. Post Liberation Day, it spiked to all the way up to about 130 basis points. So clearly the risk assets are in a massive sell-off. Sell-off much more accentuated than even some of the other safe haven assets. The other thing we noticed is that safe haven assets, as I said earlier, the US Treasuries kind of lost that kind of badge that they had, or we saw that they were not reacting in the way they used to in the past, where once there is turmoil in the market, the US Treasuries would appreciate. But we saw that only 3 asset classes, which was basically gold, Swiss franc, and yen, which actually became the trusted safe haven assets for investors in this period. So, although what we could see is that yes, the markets have basically shown a completely new dimension than what we have seen in the past, because of post Liberation Day. The other interesting thing we noticed is also if you look at the Fed fund futures, which we actually track to see, how is the market pricing in rate cuts from the Fed. And then if you see the Fed fund futures are actually pricing in at the peak of volatility post Liberation Day, about 4 rate cuts for till the end of this year. And then we had, obviously Trump kind of relaxing some of his tariffs, also brought in the 90-day negotiation period. And thanks to that, we saw that these risk assets started returning back partially or fully to their pre-Liberation Day kind of levels. So at the moment, I think we are still in that zone of that 90-day negotiation period.
That's true.
And I think that is something that investors need to watch quite closely, because until we have full clarity, we are not out of the woods.
So amidst these uncertainties, where do you think the capital flow is going amidst this condition, especially for emerging markets such as Indonesia? How do you generally see it?
Thank you. That's a very interesting question, Safrina. So if you see clearly, The money is flowing into
Safe
safe
haven.
haven assets. So safe haven assets, when I say again, it's basically your gold, where we're seeing a lot of interest coming from both retail and institutional investors. So money is flowing in there. Swiss franc and Japanese yen have also been beneficiaries of this risk off environment. As far as Asia is concerned, interestingly, post Trump's relaxation on tariffs and the 90-day negotiation period that he's given, I think the money is again coming back into Asia. We can clearly see that stock markets across Asia have actually started, have recovered. If in fact, even if you look at Indonesia now, the JCI is again in the positive territory year to date. The flows back into bond markets can be seen, and especially if you look at from a duration point of view, in mid to shorter duration bonds, you're seeing flows coming back
Yeah.
into Asia. So definitely the capital flows, and I think it's also probably the market is again looking at how to redeploy, given that they have seen some correlations break in the last 1.5 months post Liberation Day. Market is actually now kind of re looking at all the new correlations going forward, and how to redeploy. So I think Asia will be a beneficiary. Countries which have stable governments,
Sure.
countries which have got investment grade credit ratings, which are showing fiscal prudence, and are definitely going to benefit. Yeah.
How do you see it? Does this all of this dynamics and situation create somehow high risk for managing treasury assets, especially in DBS Bank Indonesia?
I think generally for treasurers, in these kind of highly volatile environments, some of these are kind of unprecedented environments. In general, I think it opens volatility on multiple fronts. So there are multiple asset classes where you have to kind of then manage uh, the risk. uh, let's start with, let's say, FX. If you look at FX, just the dollar index, which is actually year to date plunged by almost about 9%. Not just from a bank's point of view, but if I even look at it from a corporate treasurer, I mean a treasurer of a corporation's point of view, if you are exporting to the US, and if you are a UK based or a Japanese company, all of a sudden your margins go for a toss.
Yeah.
If you look at in Indonesia, I mean closer to our country, I mean here, if you see, the rupiah has depreciated, net it depreciated year to date, and if it's a corporation which is actually selling, which has only got domestic sales, but has basically has got imports and has got foreign currency loans, they're actually going to see an impact
Okay.
to their margins. Similarly, I mean, if you see in the commodity space as well, the huge volatility in commodities, we saw, in fact, many commodities year to date are in the red, are in negative. So if you are exporting out commodities, then definitely your margins go for a toss. There are organizations that we come across, who have actually had impact on their procurement side. Basically, the pricing has gone higher, not because of commodities, but because of supply chain disruptions. So
Yeah.
that has been another factor which
Yeah.
has actually impacted basically the cost of raw materials for companies. So I think all of this, plus on top of it, if you look at interest rates, uh, the interest rates on in the US, I mean, spike. The US 10 years actually moved from almost 3.55 to 4.5. Post the Liberation Day, the credit spreads actually widened substantially. Equities dropped. All of that is actually going to have an impact for a corporate treasurer to actually, from a fundraising point of view, when you're looking to raise new loans or bonds, obviously, your rate of interest is going to go higher because US Treasury yields have gone up, credit spreads have widened. Other than that, if you're looking to access the equity capital markets, because of the equity markets being in the negative territory,
Yeah.
are also going to have an impact. So all others, these are the challenges which today a treasurer faces, given the volatility in the market. Yeah.
But so for treasurers and for CFOs,
Right.
any tips on managing this risk, especially for doing the foreign exchange hedging, in order to make sure the working capital sufficiency, but as well as to preserve margins and fund expansion? How do you see it, Puneet?
Okay, good question. I mean, let's start asset class by asset class.
Yeah.
If you start with, let's say, the foreign exchange market,
Yeah.
volatility has been huge. Some of the simplest ways for CFOs or treasurers to manage this risk is just by booking, executing hedges. I mean, hedges, plain vanilla hedges like forwards, where you've got a
Okay.
budgeted rate
Yeah,
which you
yeah.
have at the beginning of the year,
Yeah.
and then you execute your hedge to ensure that you're very close to your budgeted rate. You could actually go into a slightly more advanced kind of hedging program if you have an active treasury, if you have something like value at risk defined. Then in that case you can actually use even FX options.
Yeah.
You could use vanilla FX options or structured options like call spreads, put spreads, and collars to manage your risk. Uh, Another interesting way to manage this is if you don't want to use, let's say, you don't want to use derivatives to manage
Yeah.
manage the currency risk, then actually you can go for something like natural hedge. A
Natural hedge.
Yeah. So in a natural hedge, basically, you try to match your receipts and your payments in the same currency. So you try to do that. Or on the balance sheet side, your assets and liabilities, you try to match them into the same currency.
Yeah.
So in that case, that's one of the ways. Another very interesting way could be diversifying your currencies. So rather than just invoicing, your trade in dollars. So let's say if you take the case of an Indonesian company, your home currency or your functional currency is IDR,
Yeah.
and you invoice it in US dollars today. You can actually look to change it from US dollars to currencies which show a much stronger correlation to your currency. And if in case you've got trade happening within Asia, then might as well pick another Asian currency. So you could pick renminbi or Indian rupee, which actually show much more correlation to IDR than what US dollar does. So that could be another smart way of actually diversifying your currencies. Yeah. I mean, similarly on the commodity side, you could use derivatives to hedge,
Yeah.
or you could hedge without derivatives, where you could actually have put pass through clauses in your contract. So if there is a price escalation, price drop, then there could be a pass through when you're negotiating with your buyer or your supplier.
Yeah, yeah.
Or you could have fixed rate contracts depending on what suits you. Yeah.
Yeah.
So,
How
yeah.
does DBS Bank Indonesia communicate all of these strategies for CFOs of your client's company and so on? So how is the relations between your client companies and then also especially from your global financial market division from DBS Bank Indonesia, especially since the dynamics that has been going on since the administration of Trump related to this and the strategies?
So one thing that the global financial markets team, along with the relationship management, which is our institutional banking
Yeah.
team, because the ownership of accounts or the clients relationship managers are in the institutional banking team. So we work very closely with them,
Okay.
along with with our colleagues from other departments as well. And what we try to ensure is that there is very rigorous communication with the clients.
Right.
So we will get in our research guys to come and speak to the clients to give them more color on what's happening in the economy, how could it impact them, what's our outlook on interest rates, on FX,
Yeah,
on various asset classes. So that's first thing, to educate them.
Yeah.
And then along with that, kind of also giving them insights on what kind of risks do they carry on their balance sheet.
Sure.
And given the outlook that our research team has, what are the risks that they carry on their balance sheet, and then how can they mitigate those risks through various instruments. Also advising these companies in terms of what kind of risk management policy can they have.
Yeah.
Some of them might be a little early in the phase of of their treasury transactions. So they might be doing plain vanilla stuff, but can we help them to look at other ways to kind of manage it? We as DBS, we've always tried to be a very trusted partner to our clients. So it's not just providing a product, but a solution, understanding the underlying exposure that the client has. So to give you an example, there's one client, who had a trade invoicing, which was very interesting. The trade was invoiced in such a way that it looked like an IDR exposure for an IDR company, but actually the IDR exposure had a bit of a dollar impact. So while on face of it, it looked like an IDR contract, but actually the contract said that if you're if one if the dollar rupiah moves beyond this particular range, then the loss would be borne by this client of ours. But this was in the contract, so we went to the extent to understand the contract, realized that basically it was not a pure IDR contract. So it was it was economically, it had a payoff of a dollar contract, because if dollar appreciated, they would have taken beyond a point, they would have taken a loss, which they would have then increased the price on the on the trade contract that they had. So then we had to show them a solution, how to manage that particular risk, and then they were very happy with it. They actually worked with us, and we put the structure in place to kind of hedge that particular risk.
Sure.
Safrina, we also at times advise our clients also on a new form of risk, which is actually mutation risk. Now, mutation risk is something which is very interesting. Many companies today are purely looking at the risks that reside on their balance sheet because of market movement. So let's say, if I am an exporter, and if the currency depreciates, if let's say dollar depreciates, and I have a dollar-based contract, then basically my earnings reduce. So companies are basically looking at how to mitigate the risk on that from their balance sheet or from their P&L point of view. But what happens if you have managed that risk for yourself? You have a dollar contract, you are selling to a buyer, let's say in some other country, where their currency has depreciated. Their currency has depreciated to an extent that basically they now carry a huge currency risk, and that currency risk has now actually become the market risk actually become a credit risk, because the company now they cannot afford to buy, because because the currency has depreciated so much that actually the product becomes, let's say, because of 10% currency depreciation, becomes 10% more expensive. 10%. So this is a risk which is a mutation risk, where you had a long-term contract, but all of a sudden your risk is no longer market risk, but it's actually become credit risk of your counterparty. So in such cases, advising them as how you can actually transfer that risk from your buyer to you, and then you can manage that risk. So I think those are things. I mean, similarly on commodities, where they would carry a risk of different benchmarks, etc. So how all of this mutation risk can actually be managed, because then in that case market risk becomes credit risk, and how do you mitigate that kind of
well, thank you so much for your wonderful insight, and also thank you so much for the commitment of DBS Bank Indonesia as a trusted partner of growth for business in Indonesia and also Asia.
Absolutely.
A pleasure to have you.
Thank you,
in
Sabrina.
CNBC Indonesia. Thank you so much,
Same
Puneet.
here.
Thank you.
Pleasure's mine. Thank you.
Dan demikian diskusi kita bersama dengan Managing Director and Country Head Indonesia for Global Financial Market DBS Puneet Punj, CNBC Indonesia Beyond Business.